Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly S&P 500 index analysis for the week of Monday, September 26th, 2022. Let's take a look at the charts. Another down week last week, and we closed below that significant floor of support that this week is at 3752.98, and we did so by a 1% margin. So the S&P looks to be setting up, well, it's already in the midst of a down wave. This one, though, should continue below the recent lows. We did not take out the June low, by the way. We came close to testing it, but we did not take it out. And I'll show that in a moment. In fact, we'll zoom in here, and you can see 3752.98 represented by that horizontal line. That is our resistance for the week, and below which we remain heavy. And I think over the next 1 to 3 weeks, we could fall to the 3402.86 descending channel bottom. That is this week's level. We could test that this week following last week's sell signal, and that could complete the move, actually. I could have put some numbers up here and showed you that this is the 5th wave since the January high. This is the 3rd wave down, and we had 2 counter trend waves. So this is the 5th wave down. In Elliott speak, this could be it. This may well complete the move. In fact, I think it will. But the question is, how far south will this next wave continue? 3402.86 if tested this week, that could be it. It lines up next week with 33.87 Actually, lines up is not the right word. The channel bottom itself next week is 33.87 And why I point that out is because if we back up out of this chart again and show the big picture, you can see the pre-COVID high, I think that was February of 20, was 3393.52 before the big COVID sell-off. So that in itself is a support level that's worth buying, whether you're, a day trader, certainly, a swing trader, a 2 to 3 week position trader. You could even have at it perhaps long term, especially as it relates to coinciding with that descending channel bottom. So over the next couple of weeks, we could fall into this zone. The 33.87 descending channel bottom, that's the level that'll be next week. The week of Monday, October 3rd, will line up then with that pre-COVID high of 3393.52, and we may well bottom out there through the rest of the year, and that could actually mark a good low as we move into next year and look in the rearview mirror on this big sell-off. Now, I also want to point out that if I'm looking at other things on the chart, there is long-term Fibonacci levels that I think the market may well test as well. Following the settlement last week below the 3752.98 channel top, this is a meaningful event and may well entail a bearish continuation over the next several months into the 3195.28 to 3232.62 region. You can see all the A, B, C highs and low sequence. I've got them labeled here. It is sort of a convergence or some called fractal, Fibonacci fractal, where they line up based on different highs and lows. And these two do line up pretty well. In this area, if tested, could contain selling through next year. This may be the ultimate destination, and why I point this out as well is that descending channel bottom I showed that lines up with the pre-COVID high over the next week or two. By the first week of December, actually coincides with this Fibonacci zone. So this is where the 2 to 3 month sell signal comes into play, and I wouldn't discount this as our ultimate target. And I think this would be about it to the downside. I think the move would complete itself down here. If you watch the TLT, I think we're in the bottom picking zone now with regard to the long bond. And that basically would imply that the interest rate cycle may be at least temporarily exhausting itself, and that we'll see a stabilization in interest rates. Inflation is not the threat that it was a couple, 2-3 months ago. I mean, you've got crude oil actually violating long-term support last week, which suggests that crude's going to drop another 15 to 20% over the next month or two in value. And so I just think that there is, what does that mean for the stock market? Stock market seems to be predicting recession now, more so even than it was before. And so the stock market can continue south in a vicious way. The bond market can stabilize. from what I see, and commodities can continue moving south as we maybe enter an actual recessionary environment. So that's all I'm going to say for the downside. Let's talk upside here. 3752.98 is our weekly resistance that can contain weekly buying pressures, quite possibly through the balance of the year, as I showed those downward targets that may be realized over the next few months. Zoom in here just a little bit, and I'll show you that we did not retest that low from June, which means that descending two-third speed line this week at 4166.51 remains valid and intact. Now, on the daily chart, we did close above that speed line, and I know this just from my SPY analysis that I do on a daily basis. On the weekly chart, did not. In fact, we closed at it about a month and a half ago or so, 2 months ago almost. The following week, we pushed through it. We closed negative on the week, and that was it. That was the beginning of the big sell-off. So that 4166.51 remains a meaningful resistance area, and the reason I'm pointing it out is if we close this week above 3752.98, we have a stabilization in the market, and I think with that, a near-term rally up into that 4100 handle would be likely within 2 to 3 weeks, 3 to 5 at the most. It also coincides with a former rising two-thirds speed line that we took out a couple of weeks ago, right now at 4020.99. And over the next 2 to 3 weeks, I think the middle of October, those two converge entirely. So there's a scenario that if we close above 3752.98 at the end of this week, within 2 to 3 weeks, we can rally back into that 4020.99 to 4166.51 narrowing zone of resistance that actually, I think it's the week of October 17th, all comes together. And I think that timing would be appropriate. 2 to 3 weeks from now, if we close this Friday back above 3752.98. But we're not there. I'll leave you with this image. I think this is the reality that we're in right now, and this may well be our ultimate objective as we continue into later Q4. And that's all I've got for this week's S&P 500 index analysis for the week of Monday, September 26th.